All right, joining me here at Post 9 with his holiday sales outlook is BMO Capital Markets top retail analyst Simeon Siegel. Good to see you, Simeon.
Good to be back.
Busy time for you, obviously. What are you most eager to learn over the next few days as it bears on your coverage?
So I love that question because we just heard Court very articulately give a lot of numbers. That was a skill because I don't know what to do with that. There's a lot of surveys, there's a lot of opinions. I was right there with her at the Garden State Mall at 7 o'clock, seeing all these people. But at the end of the day, what you and I want, what investors want to know, is how's the business? And it used to be that Black Friday was a great synopsis of the business because Black Friday was the only thing that mattered for holiday. But now, to her point, people are shopping before, they're shopping after, they're shopping during, the phone changes the dynamic. And so what I want to know is, we're seeing divergence. We're watching winners and losers. And certain companies are growing revenues and certain ones aren't.
And that dynamic has been fascinating through the earnings reporting season to a large degree. And I keep wondering if any of it was, or not any of it, but if it was predictable in a sense of, okay, here's a sweet spot for one particular chain that caught a fashion tailwind or something, or if it's just other normal execution.
So I'll tell you what I love. For the better part of the last 3 or so years, you and I have been talking about great environments and challenging environments, and it's all been macro, and it's all been everything. And it was a cluster. Companies were doing well because there was no inventory and there was a lot of stimulus, or they were doing poorly because there was a ton of inventory and no stimulus. But that's not what business is. Business is supposed to be market share. I am supposed to win at my competitor's expense. And that's what we're seeing. And so to your point, I don't know that it's a fad. I think we're actually seeing good operators do well. And so what the beautiful part of this is we're seeing companies sell the exact same thing to the same people, see different results. Michael Kors and Coach, you can see drastically different results. Walmart, Target, different results. Like this goes through every single sector. Adi and Nike versus Hoka and On. You just talked about Lulu. So what we're seeing is a healthy dose of business competition.
Sure. I like the framing of an investor needs either to take risk that the great companies in retail are a little bit richly valued and take risk on the multiple, or you have to take risk that maybe the earnings don't come through if something looks cheap.
So thank you to my team who hopefully didn't work too much on Thanksgiving. I think we were generally off, but we did publish a big report today where we were trying to isolate from my conversations. It feels like in this market, you either have to take risk of multiple and buy expensive for a reason stocks, or you have to take risk of numbers and buy turnarounds. And so what we're trying to do is do both, right? So we're trying to say, okay, TJX on the one hand is this compounding business that is wildly expensive, but I can't justify the multiple based on any historical, but frankly, for the entire market, I'd probably say similar thing. And on the other hand, we're looking at an Under Armour, we've talked about a Peloton, where these are businesses that people have eschewed that they hate, right? That they've just moved along and they've said these are dead businesses. They're not dead. They have billions of dollars of revenue. They just have to fix the profits.
Sure.
And so you take that duopoly, that's a very nice divergence in and of itself. And I think figuring out as an investor, do you want to pay for the risk of the multiple and say it's expensive but it's a good business? Or are you willing to say, you know what, I'm going to take risk of numbers, but I don't really worry about the multiple because it's been so depressed.
Sure. The ones that you use as examples, the Under Armour, Peloton, they are brands, right? They have some kind of brand profile, and I guess you're making the bet that it has some durability.
What I love. I'm not clever enough or fashionable enough to tell you what's going to be that latest trend. What hopefully I can do is look at what's actually happening and say the revenues are telling me what's the truth. And so if everyone's out there was a point not too far away, not too far in the past, where people would say Peloton's broken, Peloton's dead, Under Armour's dead. I know that they're not. How do I know they're not? Because people are showing me with their dollars. If Under Armour has $6 billion of revenue, it cannot be dead. If it doesn't make a lot of money, it can be very sick.
Sure.
So I can fix, or they can fix sick. You can't fix dead.